Hi and welcome to Building Tomorrow's Insurer. My name is Nigel Fellowes-Freeman. I'm the host and the founder and CEO of Kanopi. And we today are very excitedly kicking off our limited series exploring really one of the most exciting and emerging technologies in insurance today, and that is generative AI and large language models. And over these next kind of few episodes, we're going to be going a little deeper into how Gen AI and LLMs are really starting to disrupt the industry value chain more broadly, and how insurance is going to get delivered. And we're going to do that in individual segments. And today's segment is really focused on kind of the particular application of LLMs and Gen AI in underwriting. And it is my absolute pleasure to introduce our guest today, Peter Tilocca. And hopefully that's pronounced right, Peter. You can correct me if I'm completely wrong. Peter has decades of experience in the underwriting space. He is a champion of digital transformation, and he's kind of been modernizing underwriting practices in corporates with a list very long, including ING, ANZ, and Zurich. And so thank you, Peter. Wonderful to have you here, and really, really looking forward to the conversation.
Thanks for having me. I really appreciate it.
Absolute pleasure. Well, I'm trying to think, there's lots of different places that we can get started, but I thought maybe a nice place to kind of frame up the conversation would be to just kind of have a quick recap on the traditional underwriting. How has underwriting been done over the last few hundred years? So maybe you can just give us that kind of baseline of how underwriting has been done traditionally.
That's a great starting question, Nigel, because this is one of my pet hates in terms of the underwriting process. So essentially, life insurance underwriting has not changed in decades, if not a century. And how I know that is I was doing some research for a presentation, and I came across a life insurance personal statement. I think it was 1906. And essentially it was the same as what we have today, except they asked for, if you had typhoid or cholera, things that we don't ask about today. But essentially, they did, the question sets were very similar. And I just thought, wow, look at that. Like, we have not changed at all. And we rely on the same data sources, essentially, that we have done, let's call it for the last century, in terms of we really use the personal statement that the clients complete as the basis for the risk assessment. Obviously, that's augmented with in terms of if you need a doctor's report or blood testing or whatever it might be. But essentially, the same question sets, same data points, and the world is much more complex today than what it was in 1906. And that's why I had that sort of, if you like, an epiphany where it dawned on me that, wow, we were so far behind and we really needed to do something about it.
Super interesting. And like, to an extension of that, as the labour and technology evolved at all, obviously kind of 100 years, the background tech has seemed to have evolved in terms of kind of platforms and technologies that are able, outside of AI, but kind of just thinking on maybe the last kind of 30 or 40 years of technology evolvement. Has any of those filtered into the underwriting space, or have they kind of been, Excel has been kind of the core and we've kind of kept it there and not migrated too much across onto any of the digital platforms?
No, definitely from a life underwriting perspective, last 20, 30 years, most organisations have transitioned to digital underwriting rules engines. So at the very least, we've progressed to capturing data in a digital format. And if you capture data in a digital format, you're able to mine it and try to grab some insights. The issue there is if the data is in a one system, you can only see things that are recorded in that system. And you can't look at different platforms or different data sources within the organisation. So, for example, your underwriting rules engine would be one data source. Your policy admin system would be another data source. Maybe your CRM, definitely your claims data would be another source. And integrating those data sources to give you a holistic view of what's happening is still something that life insurers struggle with.
That's really interesting. That single view of customer really, really important. That's actually something I was just at ITC Vegas last week or the week before, and that was something that came out very strongly actually, which was carriers really trying to get some data cleanliness around kind of their digital transformation, but they're all pretty early in the journey. So I think it doesn't sit just in life. I think generally across the P&C as well. I think kind of that cleanliness of data and getting a single view is so important, and I think that's a critical piece before we can kind of add in any of these kind of larger technologies, right? If we kind of think about kind of these LLMs that are coming that can do a bunch of stuff with unstructured data and all those kind of interesting things we'll talk about a little bit later. Is there any kind of other tech milestones that you've seen come in over the last kind of since you've been kind of working in the space? Obviously, you've spoken a little bit around digital kind of platforms and really digitizing a form, and rather than doing it in a manual spreadsheet, putting the kind of if this then that kind of algorithm into a digital format. But is there any other major kind of jumps you've seen from a technology standpoint in your world?
Honestly,
and no is a fine answer, by the way.
Honestly, I was going to say no.
No is, yeah.
Sure,
it's been a slow burn.
There's iterations, right, in terms of progressing technology and platforms. But I suppose maybe I'm a bit harsh in regards to saying no, but there's that avalanche, if you like, of health and well-being services and apps in terms of life insurers and other insurers, health insurers. Trying to be more than a life insurer per se, where the only interaction really is there's a couple of interactions, that application stage and then a claim stage. And again, part of the issue with all that is typically there's application stage. We communicate with our customers once a year when it's renewal time, and guess what? We go from, hey Nigel, how you doing? Nice to have you as a customer. We're just going to increase your premium rates again. And so that's from a customer-centric perspective, that's not a great interaction. And then you have the claims part. So the advent of health and wellbeing services, where life insurers are trying to become more embedded into the lives of their customers, I think is a positive aspect. And collecting, whether it be wearable data or other data sources, to try and improve the health and wellbeing of our customers, I think is a great step, and that also leads to the advent of ecosystems. And as we know today, ecosystems are really, really important, because no life insurer, no company on its own can achieve what needs to be done, and you need that strong ecosystem of partners that help you achieve what you need to do. So that would probably be the only addition to, if you like, in terms of other technologies or data sources.
And in your underwriting world, did you start to see that health data making meaningful differentiation on the underwriting side? I know obviously there's the wearables data, which is kind of how often do you exercising, and blood BPs and like feeding all that data back in. But obviously you've spoken a little bit about kind of data sets not being in a single place, and therefore kind of them specifically impacting underwriting might be challenging. And so can you touch on that? Like it was actually kind of seeing a direct kind of correlation between you being able to impact underwriting and that wearables data, or is it still kind of working its way through around how you can actually use that information?
Yeah, so it's the latter. It's working its way through how you can use the information. So at the moment, it's pretty much confined to rewards and engagement of customers. So if you do your 10,000 steps a day over a period of time, you may get a reward, and it may be a gift voucher or something along those lines. So that engagement piece to keep people healthy. So it's very much siloed in respect to that. The next frontier, though, is very much around, okay, how do we use step data and sleep data and whatever it might be to help improve the underwriting process. And we're also, most recently, I was looking at the facial technology and facial apps that are out there today that purport to be able to accurately measure your blood pressure, cholesterol, glucose, stress levels, and other medical elements, where it's just hold the camera to your face for 50 or 60 seconds, and then you get your results, right? And so again, you look at that now and say, wow, how can we use that? Probably not today, but I can't see it really being any longer than a couple of years, whereby the technology advances, and not forgetting that these medical test results are they have to be, depending what you use them for, but typically if you're going to use them in a medical scenario, they have to be like FDA approved, and so that they can be used from that perspective. But that's the next frontier as well. So you're looking at, and there is evidence, scientific evidence to show that, if you do your 10,000 steps a day and you get your 8 hours sleep, then, your life expectancy and your propensity to claim are vastly improved. So, again, why can't we use that sort of data going forward? Lots of people would say you can't, but I always challenge and say, why can't we?
Why can't we? Yeah, sometimes it's always it hasn't been done, so kind of it's the hard step to take, isn't it? In
Correct,
terms of carrying that kind of underwriting risk. Someone's got to wear the balance sheet risk, and sometimes there's a bit of lots of nervousness around that. So we kind of touch on there kind of some interesting points there, which are these kind of general transitions. And I think the core of what we've just spoken about is kind of interesting new data sources that are being able to come in and be kind of data inputs. And that's kind of a really nice transition into thinking about this kind of new technology shift that we're seeing, that we're in right now, which is this shift into the generative AI and obviously and specifically these large language models. And data is the core of all of those, right? It's the thing that makes those tick. And without it, they don't work very effectively. And so when we think about this generative AI as a thing, obviously kind of exploded over the last kind of 12 months, but really been 5-ish years since kind of the first kind of paper got pushed up, and there's been the transformer models, and these kind of things are really starting to help kind of build out this space. And obviously a large language model, really the kind of its ability to kind of take in structured and unstructured data and then kind of make reasoned decisions around what it's seeing, and kind of then feed that back and kind of put that back into another potential system. Obviously seems to have, if you kind of overlay that with kind of underwriting in terms of data inputs and how an underwriter works today, which is kind of look at a bunch of data and then make a decision on what it's seeing, seems like it would have a pretty kind of logical place to sit. I'm kind of interested in kind of what your initial reactions are, maybe kind of perceptions of people you've been speaking with in the industry and your peers around underwriters. Just maybe we can kick off there around what's your early perception? What are you thinking about? What kind of has surprised you?
I'm really excited by these new data sources that potentially have use in a life underwriting perspective that have never been thought of. When we started with what they term big data and the Internet of Things and predictive analytics. So these humongous data sources that have never really been tapped into, or try to understand the correlation between what are these data sources telling us that we could potentially use in the underwriting space to improve the customer outcomes. And I'm going to be controversial, but there's global studies, and we ran a local study here in terms of the credit scoring of people and the propensity to claim, and there's a strong correlation in terms of low credit scores, high propensity to claim, and the inverse is true as well, and that's been proven globally via a number of studies. Do we use credit scoring? No, we don't. But under the open banking regime now that we have in Australia, if, for example, if customers are willing to share the data with us, we could improve the underwriting outcome. We could improve the rate that we charge people. Again, people say to me, you'll use the data to exclude more people. So no, that's not the purpose. The use of new data sets is to try to make things better. You don't want to, I always say, use data for good and not evil. And so, using these different data sets that are out there. So that's an example of one. Wearable data is an example of another one. Location data is another one as well, which correlates to socioeconomic status to some degree. And all those data sets that are out there today that we've never looked at previously, having done some work in that space, again, you can see some strong correlations between certain data sets and propensity to claim. And I think, that could really, if you think about the underwriting process today, I don't know if you've ever applied for a retail life insurance product, whenever I ask a question in a forum, and people say, yes, I have done that. And I said, did you enjoy the experience? Everyone says no. And that's because completing a life insurance personal statement can take up to 45 minutes. And insurance is a grudge purchase. No one wakes up in the morning and says, hey, yippee, I want to go buy some life insurance. And so, that whole journey that we put people through, if there are, data sources which can act as a proxy for those underwriting questions, then you can really truncate that whole process down, and make that whole experience a hell of a lot better than what we do today.
Yeah, that makes a bunch of sense. And thinking about that in terms of that data input, and then thinking about underwriters today and kind of their roles, but thinking maybe more in the group space in terms of when you've got, 1,000 employees, and you need to maybe look at all of the data of all of those employees to then try and think about kind of what the risk profile is of all of those folks. That can take an underwriter potentially hours, maybe days, to kind of review and think about all of that information. And when you're kind of thinking about a large language model, they're really good at that. They're really good at looking at all of those big chunks of data and synthesizing it and giving an output or giving some potential knowledge or kind of outcome from looking at all of that information. And so kind of when I think about kind of potential application of LLMs in the underwriting space, I think kind of helping to do that data synthesis and then give an output, I think feels like a really good or feels like a meaningful use case to help an underwriter. Have you kind of seen that? Have you kind of is that something that kind of you've thought about at all?
Oh yeah, absolutely, and it's been very much focused in on the retail space, because that's where the bulk of the underwriting is. But certainly, looking at, for example, if you're looking at, where do people reside now? General insurers use that as part of their risk assessment. We all know the issues with flood plains and flood areas, and in terms of unavailability of insurance in some of those spaces. But if you look at that from the life insurance perspective, with global warming, for example, where we used to see certain temperatures consistently in say in far north Queensland, and those temperatures coming down to a certain part. That's all changing, right? People are going to say, what? Well, because, if that changing environment brings with it certain diseases that you would not normally have seen potentially in New South Wales, for argument's sake. And they're tropical borne diseases, and they can add, to the risk. You look at the expansion of the cane toads, for example. They used to be only in far north Queensland. They're being found, in a lot of other places much further south, and that's because, the temperature and the weather allows them to survive in those areas. And then when you have the flood risk, I mean, again, people typically think about, the house collapses or whatever it might be. But then you've got to think about the mental health issue that is associated with that. And, if we have areas now where, say, the house is uninsurable, but people still are, but what happens, to the mental health of those people that live in those areas? And that also has to be considered. So, even geographical data, which, again, from a life insurance perspective, is not really considered. These are all shifting dynamics, which, LLMs, across, large areas in terms of and large data sets will help identify and will help also, I think, improve that whole customer experience and the pricing, because we use very broad pricing factors in life insurance in terms of pooling risks. But, again, societal expectations are different to that. They expect a level of personalisation. And I think we're still way behind on that curve.
And do you think there's any, shifting it a little bit from maybe thinking about the potential application of LLMs and then thinking kind of maybe what sits on the other side, which is potential roadblocks? I know that lots of conversations we're having with the carriers, we do some work in this kind of generative AI space, and the conversations we're having with carriers is that there's some strategies being put in place. There's some kind of top line requirements in terms of vocalizing to the market around what your AI and Gen AI strategies are, but the actual underlying kind of execution of them is somewhat to be determined, I think. And I think a lot of that is potential roadblocks, maybe ethics, execution, data security. There's a number of things that I think kind of are coming up in the executive conversations that we're having. Is there any that you have come across or seen, maybe specifically in underwriting, that kind of yellow flags for you that think these are things that the big organizations that I've worked in would definitely raise these as things that have to be solved before we can implement these kind of technologies?
Yeah, absolutely. Very, very key part of this whole, transition to our new data sources and new technologies is about being fair. And that's why I made that statement previously about using data for good and not evil. I'm not looking to put people in a worse position, but certainly, we can do better in terms of that risk stratification and then pricing. I know when I first started working in this field, I had a number of people say to me, we'll create this black box for you with algorithms and it'll data in and give you a result. And I very quickly said, no, do not give me a black box that I don't understand. Because from a life insurance perspective, if we get a complaint through some of the regulatory bodies, we have to explain how we came to our decision. We have to show our guidelines, our underwriting philosophy, to explain our decisions. The creation of a black box will not do that, and won't be acceptable from that perspective. So certainly, and yes, and there is the potential, as everyone knows, around is the data skewing biases, for example, and things that you need to be aware of, in terms of, and if you start looking at, say, socioeconomic data, and then there's areas, suburbs, whatever it might be, that rank low, and therefore, the data indicates that there are higher claims risk, and that suburb seems to be populated by predominantly by an ethnic group, then all of a sudden you're going to be accused of, racial bias. And so there's those sorts of elements that you definitely need to think about. So it's really, really important to have, strong principles around the use of data. It's really important to have, if you like, an oversight or an ethics committee that looks at what you're doing, and they come from different disciplines, within and outside of the business to help guide that. And it's really important, as I say, you understand the data that's going in is probably easier than the data that's coming out in terms of what it's showing you. And you need to be, because you can certainly, go wrong if you're not careful about what you're doing, and ensuring that, I think, touching back on what you said previously, Nigel, that the data cleansing is a critical element of this whole piece, because as they say, garbage in, garbage out, and if the data's not cleansed and in the right format to be able to be analysed, then again that's going to skew results. So you need to spend a fair bit of time up front, and that's not the fun part of this, right? cleaning data, but it absolutely has to be done. So yeah, it's really important that you have that right framework around what you're doing, and that you don't have people going rogue, if you like, because it could be some dire consequences, that's for sure.
Yeah, I think with that piece you just mentioned around the black box, it's an interesting one, especially when we think about regulation and thinking about implementing these kind of models inside of organizations that are APRA regulated and have to kind of show workings, because the reality of a lot of these models is that not everyone, we don't really understand how they work really. And that's there's a neural network that sits within them. The purpose of them is that they kind of these models that actually it's challenging to understand exactly kind of how everything's done inside the box. And so that transition from how do you stand behind the decision that's made by a large language model versus a person? And now there may be a good argument to say the decision that's made by the model versus the person is actually a better decision. There's potential of that because there's human error and all of those kinds of things, and obviously there's error within models. And so I think there's a really interesting debate on how that's going, but regulation's so far behind that, right? Which is regulation today stands behind the human, and for that regulation to be able to adapt and stand behind a model, there's a lot of understanding that has to happen by those regulatory bodies of how these models work, and I can foresee that being, I guess, the challenge to the transition from data extraction to knowledge application of the models. I think it will be this kind of key learning that the regulatory bodies have to go through to be able to sign off on, yes, we're happy for these models to make these kind of decisions when supported by a human. And then who is liable? Like, is the model liable? Is the company liable? Is the human liable? Obviously, there's some bunch of kind of regulations coming in, right? Which is now the person, the specific person, is gonna be liable on the hook for a bunch of these kind of risk decisions versus the company, etc. And so, who becomes on the hook when the model's making a decision? So I think there's definitely some things that are up in the air around the models and decision making. But I think it's one that I think everyone understands needs to be thought about, and I think everyone's starting to lean into it.
Yeah, it was interesting. I think one of the key
and
questions.
Maybe that.
So I was going to say one of the key questions we asked, when we started working in this space and then seeing the outputs, the key question we asked ourselves was, does it make sense? Is it a result that we would expect? Not absolutely exact expect, but in the realms of what we would expect. And we had a couple of instances where we just didn't understand the output. And then when you track backwards, you come to the point and go, oh, I understand why we have that result now, because this data point here was, incorrect, or it was misleading in terms of the terminology that was used, the banner. And so, if we hadn't have questioned those outputs, potentially you just would have charged on with incorrect outputs, which is, and again, you just got to keep, I'm sure people don't just sit there and go, I'll just blindly accept what it's telling me. But I think it's really important that you question it, make sure that it's, it makes some sort of sense to you as an experienced person in the industry.
Yeah, I think like from a Kanopi point of view, in terms of thinking about how we're excited about this area specifically with an underwriting and how we think about the platform, I think it's not in the face of all of those, but it's kind of understanding all of those challenges exist, but still having like maybe a core fundamental belief of maybe how it could impact specifically underwriting. And I think we've touched on it a little bit, which is I think over the next kind of maybe 12 or potentially 24, but maybe kind of 12 months or so, is this kind of really true inflection point between this, yes, data extraction, i.e. kind of data in, and then this knowledge application on the other side, and kind of that moving from augmenting that data coming in, but really then starting to use the model and its kind of underlying capabilities to make and the models and the foundations to make the decisions themselves. And so kind of rather than kind of maybe saying how many kind of claims has this customer had in this specific location, to based on that data around claims and based on my underwriting rules and principles that you set in terms of, Peter, you set in terms of these are the principles and rules that kind of I'm setting the model up to think about, and it then coming back with a specific decision with reference to the kind of setup that you've put in place, which is should I underwrite it? That kind of shift from just data in and then human to data in, you setting rules and then kind of model making some decisions underlying the underwriting structure that you're putting in place, I think is this big shift that I can see in the future, I think, of how underwriting will change. And I think the risk is folks that, and corporates that don't get them on their boat, this boat early and start to understand, will be at risk in terms of, if we think about the being able to write better risk and the cost of underwriting generally, if your competitors are writing 5 or 10% cheaper and 15% more efficiently, then you're going to be able to give a better price and premium to a customer, and therefore there's a risk. And so I guess that's a really broad statement, but I think that's what I see in terms of when I think about Gen AI and LLMs and this kind of shift from data in to data out and plus knowledge, I think is, in my view, kind of the really interesting part of how we're going to evolve over the next 12 or 24 months.
Yeah. I mean, have a good example of that where you and I have been talking about, policy acquisition or customer acquisition in terms of the underwriting space, but where applied this in the back office scenario quite successfully is, we created a quality assurance model that has helped reduce what I call underwriting leakage. So an underwriter has made an error from their decision perspective. The case has gone in force, and a few years later there's a claim on it, and benefits paid out on something that was clearly an underwriting error, but you can't do anything about it. You have to look after the customer. That was at one point that was frustrating me in terms of those occurrences, and so we set about trying to build a quality assurance model that would use using LLMs and looking at the historically, if the client disclosed these aspects, then the outcome 98% of the time would be X, for example. And if we applied that across every underwriting decision made on a daily basis, and it was pulling out instances of errors, or it thought it was errors, which is okay. I'd rather that be a bit more conservative than not. And so from that perspective, just thinking about it from an internal aspect, that tool in itself, based on historical precedents, was saving the organisation millions of dollars every year. And you think about, wow, that's millions of dollars that you could reinvest, somewhere else. And that's the stuff that people don't see.
Yeah, and they're the things that impact the claim at the front. Sorry, the price and the premium, all those things at the front, but all the efficiencies can come at the back.
Correct.
I completely get that. That makes a bunch of sense. And I'd love just to take like maybe just 2 minutes, kind of becoming towards the end. I'd love to understand how you're thinking about the future. Now, obviously, I've kind of just articulated a little bit of how I think maybe kind of specifically underwriting could be impacted. Have you got a thought around the future and maybe the balance between technology and humans and how those things they work together in the future of underwriting?
Yeah, I mean, the first question people underwriters specifically ask me is, will I lose my job because of all this? And I refer them back. I said, well, if you look historically, when we introduced underwriting rules engines, so away from paper to engines that could make decisions, how many people lost their jobs because of that shift? And the answer was zero. And so, yes, this is a lot more advanced from going paper to digital, but the benefits of going down this path is that you can really make a step change in terms of how you assess, and the roles of underwriters will change. There won't be a need to have all these underwriters working on individual applications, for example, but there will certainly be a need for people with underwriting skills to look at what are the data sets that we could use, how are they useful, what are they telling us, what are the emerging risks. So as I mentioned before, with climate change and the warming of Australia, for example, what does that mean to us as a life insurance industry, and how do we more effectively risk assess that? And then also one of the other roles that I see coming is also that as we use LLMs to make more and more decisions, how do you justify that? How do you explain that as well? So you're going to have really exceptional underwriters with skill sets that will transition into looking at these areas and making real-time updates to your models to reflect what's happening out there, and understanding. Last week we had 20% of our applications, they disclosed mental illness, for argument's sake. This week it's 35%. Wow, what does that mean? What do we need to do, for argument's sake? Or how do we need to set up the senior management to say, hey, this may impact our results down the track. So I think roles will become, for the people that want it, underwriting roles will become much richer, deeper, and working on the broad picture rather than just focusing in on the one application that's in front of you.
Yeah, but moving away from execution and more into maybe kind of strategic thinking around underwriting versus purely the execution of kind of paper in, paper out, underwriting in the middle, like thinking more broadly around their kind of risk writing. Well, I think that's like a wonderful kind of place to wrap on in terms of it seems to me like the future of underwriting is very bright. I think the kind of those young underwriters who are looking to the future in terms of kind of other roles can be exciting. I agree. I think the advent of these models is going to kind of make the roles richer, deeper, more strategic, and kind of impact kind of companies on a broader level versus having to kind of move things in and out on a daily basis. So Peter, look, this has been such a wonderful, insightful session. It's always great to hear from folks that are in the businesses and making decisions on a daily basis and kind of seeing how these things are being brought to life. So thank you so much for your time. It's been really, really great.
Oh, it's great to be here, and I really appreciate the opportunity to, because passion is an often overused word, but this is something that really energizes me on a daily basis to think about the challenges and how we solve them with different methods, not methods that we've used previously. So thanks again for the opportunity.
Absolutely. Absolute pleasure. Well, I hope you enjoyed the episode. Maybe if you want to watch the video version of it, make sure you head over to our YouTube channel. The link is in the description below. And if you want to hear more from some industry leaders that are pushing the boundaries of insurance, make sure you do check our other episodes of the podcast series, Building Tomorrow's Insurers. who are through our socials and all of the normal applications you can find our content on. So please do follow us on LinkedIn, Twitter. The links are in the description below. Thanks, and have a wonderful day.